Trading can be very simple, especially on this very pair, Euro USD and USD JPY right here, if you understand the concept of liquidity satisfaction at a particular point. So in this video, I'm going to talk about liquidity satisfaction when market come to a particular key level, just like this very area or this very level of resistance, and the weekly analysis bias. So watch this very video till the end. If you're first time here, my name is Paradise. On this channel, I discuss everything about Forex, day trading strategy to keep you profitable. Please support this channel by leaving a like for this video, subscribe to this channel, and turn on the bell notification for more Forex videos like this. Also check the channel for other Forex content. Right here on the USD JPY chart, you see the market is moving to the upside. The concept of liquidity satisfaction is what almost all traders should know in the market for you to really decipher where the market is going to go next. Let's say, for example, in this very area where the market is right now, I talk about the market coming into this very area and grab liquidity, and that's what we see right here. Liquidity have been taken out of this very point of resistance, and as you can see, the market is moving sluggishly to the upside without strength at this very point. And my expectation is for the market to move a little bit into this very area of resistance right at this very point. This was where you see the market move drastically from to the downside, and market begin to recover from this very move and then come back to the downside, and the market move again to where it is right now. What I am expecting is for market to still move up. Why? Because at this very point, liquidity is not satisfied yet at this very area. And you can say liquidity is not satisfied in a particular market when you go back to the 4-hour chart and check what buyers and sellers were really doing when the market break out of this very resistance. So as you can see on the 1-day chart, USD JPY, liquidity is not satisfied at this very point, and the market have capacity to move to the upside. Now the next question is, how can you guarantee that liquidity is not satisfied after the market break out of this very point of resistance? When you go back to the 4-hour chart, you see that clearly that the market is still moving to the upside. Look at it here. The market moved all the way from here to this very point. So this liquidity at this very area of resistance was, pushing the market to the downside by the bears, and the market eventually move up, and then we have this very significant breakout. What I am expecting is for the market to move up, but if you look at it on the 1-day chart, liquidity is not satisfied because after the market created a new high at this very point, and then what we're supposed to see for us to say liquidity has been satisfied and that the market is going to come back to the downside, on the 1 day we're supposed to see the market come back down and then have a fail swing and then break structure. Once we see a break of structure after a fail swing, then liquidity is satisfied at this very point on the 1 day, then it means that the market is going to continue this very move right here to the downside. This position us in such a way that we now know that this very movement to the upside have ended and that the market is going to come back to the downside. This is very important. It's one of the way you know when liquidity is satisfied at a particular level on the higher time frame, so that you can go on the lower time frame to trade with what the bigger players are doing in the market. This is very important. If you add this to your trading strategy, you will discover that you are going to be in the right direction of the market 85 to 90% of the time. And if you look at what we are seeing on the 4-hour chart USD JPY right now, is the market break this very level of resistance right at this very point, and the market is at this very area. What I am expecting as we resume the market on Monday is for the market to have a retracement to the downside and then continuation, because if you look at this, market move all the way from this area to this very point. We see this retracement coming to the market, and the market move again to this very level. So retracement is needed on the 4-hour chart. We may not see that significant retracement on the 1 day yet, okay, because liquidity is not satisfied at that very point on the 1 day. So retracement is required on the 4-hour before the next continuation to the upside, and I am expecting that continuation should enter into this very level of resistance at this very point. That means after retracement, market should come into this very area, and then we will also apply the same technique to see whether liquidity is satisfied at this very point before we can then sell the market or short the market to the downside from this very area. So this is very, very important. It makes you check where liquidity is satisfied and where liquidity is not satisfied. So if liquidity is not satisfied at this very point, then it means that there will be a continuation of this very trend to the upside, because if liquidity is not satisfied, then we're going to see the market move upward a little bit, and then market is going to come back down and then continuation to the upside. But if liquidity is satisfied, then we're going to see the market come back down, have a fail swing, and then come back to the downside, create a new lower than previous low. Then market is going to begin to move to the downside. Once you understand this concept, then you're going to be in the right direction of the market 85 to 95% of the time when you are trading. So, and you can only master this concept by practicing it on your chart. Euro USD 1 day chart right here. If you look at what happened at this very point, we have the market move all the way from this area to this very area, and resistance, market come back down in form of a retracement, and right now market is moving to the upside. I am expecting that we have a fail swing on this very chart, and that fail swing will make the market to begin to move to the downside on Euro USD 1 day chart. So what I'm expecting is very simple right here. Market should move up a little bit and should not create a significant new high, and the market should begin to come back to the downside. Once we see the market create a new low lower than this very low right here, then the market is going to come back down. And if we see a significant high, that means the candle that break this very level of resistance, the market is going to move into this very level of resistance. Note that the market can just move from this very area and move upward, create a slight new high to grab liquidity from this very area before it will come back to the downside. So what I am expecting on the 1 day chart is for this market to come back to the downside significantly. And if you go back to the 4-hour chart, something very significant is also on the 4-hour chart right now. If you look at this very area on the chart, you see the market move all the way from here, significant retracement happen at this very area to the downside, and then we see the market begin to move upward. Right here is where we see the market move down, fail swing, and the market break this level right at this point. The market come back down. Right now, market is at this very point. For us to say that this market, this retracement have ended, we need to break this very little level of resistance, which will prove that the market is going to move upward into this level of resistance. So for us to say that this retracement have ended in the market need to create a new level of resistance, which is higher than this very level of resistance right here, which is the immediate previous resistance to the current market position. So once we see that, market is going to move upward, and we need to see the market not create a new high right here. Okay, market have capacity of coming into this very point and then come back to the downside, which is what I am expecting. Market should come from this very area and move upward to this very point and then finally come back to the downside. This is what you need to pay attention to on Euro USD right now. Euro USD, I am expecting the market to come back to the downside, and we also have the market have that possibility of moving upward a little bit and then create a new high and then come back down after creation of a new high. So you need to pay attention to Euro USD where it is right now, because it's very, very critical. And you need to understand the fact that for market to move upward, we need to break this level of resistance right here, and the market is going to move upward a little bit before it will come back to the downside. And what that means is, if we see the market move upward and then create a fail swing and then not create a new high at this very point, wait for the market to come back to the downside with significant bearish presence. Once we see a significant bearish presence, then it means the market is going to come back down, and that is the right time to take a short or sell position for the market to come back to the downside. So liquidity grab on the 1-day chart has already occurred. We can see a second one right here. As you can see on the 1-day chart at this very point, market will have capacity of coming back into this very point of resistance right here from where it is, and then grab liquidity from here before it will eventually come back to the downside to form what we call a double top pattern formation. And if we see a double top pattern formation, then that means as market cross this very area of support, it will be a nice time to take a short or sell position for market to come back right down into this very zone of support, as you can see right at this very point. So this is what you need to pay attention to right now. Once you understand the concept of liquidity satisfaction, that means which area, resistance and support, is liquidity satisfied. Once liquidity is satisfied at a particular level, then that means there will be a change in the market direction of that very market, and you're going to trade in line with the present market condition. So this is what you must have to pay attention to anytime you want to take a trade. Please support this channel by leaving a like for this video, subscribe, and turn on the bell notification for more forex videos like this. Also check the channel for other forex content. If you've not registered with any broker, check the description of this video. You see a link to a recommended broker and do a registration right away. Thanks for watching, and I will see you in the next video.